day and welcome to the Q3 and 9 months FY23 earnings conference call of Supriya Life Sciences Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rasika Sawant from Orient Capital. Thank you, and over to you, ma'am.
Thank you, and welcome to the Q3 and 9-month FY23 earning conference call of Supriya Life Sciences Limited. Today on this call, we have Dr. Satish Wagh, Chairman and Managing Director of Supriya Life Sciences Limited, along with senior management team. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of investor presentation of the company, which has been uploaded on the stock exchange and company's website as well. With this, I now hand over the call to Dr. Satish Wagh for his opening remark. Over to you, sir.
Good morning and warm welcome to all the participants. Thank you for joining us today to discuss the Q3 and 9M financial year 23 results of Supriya Life Sciences Limited. To take us through the results and to answer your questions, we have with us the top management from Supriya, represented by Dr. Saloni Wagh, Director, Mr. Krishna Raghunathan, the Chief Financial Officer of Supriya Life Sciences Limited, and our investor relations partner, Orient Capital. I hope everyone got the opportunity to go through the financial results and investor presentation, which have been uploaded on the stock exchanges as well as the company website. Before we discuss the business performance, I would like to brief you a few developments at Supriya Life Sciences. I am happy to report that the board has appointed Mr. Krishna Raghunathan as Chief Financial Officer of the company. He is a dynamic professional and qualified chartered accountant, having more than 2 decades of the rich experience with an excellent track record in departments like finance, treasury, and investor relations. Krishna has a demonstrated history of working in diverse industries, including pharmaceutical, packaging, and information technology. He is seasoned pharma specialist with more than 2 decades of experience in the companies like Dr. Reddy's Laboratories Limited and Granules India Limited. His appointment is in line with the company's strategy to achieve accelerated growth in the years to come. We welcome him to Supriya Life Sciences family and wish him all the success in his role. Let me now share some key highlights for the quarter 9 months ended financial year 23. As you all know, it has been a challenging quarter for the global economy, and our industry has been no exception. Due to continued challenges posed by the lockdown in the major cities in China, the drop in demand of the K products has led to pressure on top line and profitability for quarter under review. However, our endeavor is to navigate these challenges and focusing on taking adequate measures to minimize the impact on our business. Our primary focus remains on expanding our regulatory market presence with new emerging markets, backward integration, and manufacturing capacity optimization. For 9 months ended financial year 23, our operating revenue was 319 crores as against to 342 crores in 9 months financial year 22, with an EBITDA of margin 23.2 and PAT margin of 16.2%. Our operating revenue in Q3 financial year was rupees 105 crores as against 117 crores in Q3 financial year 22, a degrowth of 10% on year-on-year basis. This week, I now hand over to call Dr. Saloni Wagh to share the key highlights of our business performance. Over to you, Dr. Saloni.
Thank you, and good morning to all the participants. We welcome you to the Q3 FY23 and 9-month FY23 earnings call of Supriya Life Sciences Limited. I would like to share an update on developments and performance of the quarter under review. As informed by our CMD Dr. Wagh, we have had a challenging quarter. We have a leadership position in antihistamine range, and for this, China is one of our largest markets. As this product range is a mature range for the company and already in regulated markets, the revenue and margin contribution of the same is high. There has been a severe outbreak of COVID in China for past several months. We have been transparent about lockdown situation and have continuously communicated the supply challenges we have been facing. Due to the extended lockdowns and widespread use of masks and sanitizers, the demand for the antihistamine range of products has gone down significantly. We are facing demand and pricing pressure from this market. The situation in China remains grim, and we anticipate a similar trend in the coming quarters before it starts to improve. Other markets and therapeutic categories continue to be stable. However, as we operate predominantly in export market and there are long holidays in December, the sales get pushed to the last quarter. Hence, for other therapies and regions, we have not seen any sales loss. Considering our current situation, we have already been working on the de-risking strategy to mitigate the impact of our dependence on a particular product and/or geography. We have enhanced our capacities and initiated registration for other therapies such as decongestion, antihypertensive, anti-asthmatic, vitamins, and anti-allergics. These therapies have good volume potential in regulated markets. We anticipate that these will start seeing a good traction in regulated markets in the next 2 quarters, which will help stabilize our portfolio even if the situation in China does not improve the way we are expecting. Additionally, we are in the advanced stages of discussions for 2 CMO opportunities and getting multiple inquiries which we believe will start contributing to our top line and bottom line from Q3 of FY24. We are also evaluating new products in our R&D pipeline to increase our product basket and therapy exposure. Furthermore, we are strengthening our senior management team to enhance our business development, manufacturing, and R&D capabilities with the aim of creating a more robust business model. Talking about our facility upgradation work, for capacity enhancement, our E block, which will add 350 KL capacity, work is going on and we expect it to be operational by Q4 of FY24. Our admin building at our Lote site with the new R&D center, QC and finished goods warehouse will be operational by Q4 FY23. R&D facility with pilot plant expansion activity at Lote site and Ambernath is going well in time. Lastly, I would like to touch upon company's backward integration business model. The top 12 products which we produce contribute to 72% of our total revenue. We are extending the backward integration model to our newer products as well to stay competitive. By adding more products, geographies, increased penetration in regulated markets, expanding our customer base, adding more operating sites, we are completely de-risking the business, a stepping stone to our success story.
We are confident of our de-risking strategy and other initiatives that will help us recover our top line and improve margin profile in the quarters to come. Overall, company's growth strategy of doubling the top line by FY26 remains the same with a healthy and sustainable margin. With this, I will now hand over this call to our CFO, Mr. Krishna Raghunathan. Over to you, Krishna.
Thank you, Dr. Saloni. At the outset, I would like to thank Dr. Wagh for the introduction, and I am excited to join Supriya Life Sciences Limited and be a part of such a talented and dedicated team. I am looking forward to contributing to the growth and success of the company and to being a part of the exciting future that lies ahead. Let me share the highlights of our financial performance for the 9 months and Q3 FY23, and following which we will open the floor for question and answers. Company reported revenue from operations of rupees 105 crores in Q3 FY23 as against rupees 117 crores in Q3 FY22 and rupees 319 crores in 9 months FY23 as against rupees 342 crores in 9 months FY22. EBITDA in Q3 FY23 stood at 14 crores as against rupees 38 crores in Q3 FY22 and rupees 74 crores in 9 months ended FY23 as against rupees 132 crores in 9 months FY22. EBITDA margin stood at 13.4% in Q3 FY23 as against 33% in the same period last year and 23.2% in 9 months FY23 as against 38.6% in 9 months FY22. Profit before tax was at rupees 12.6 crores for Q3 FY23 and 70.2 crores for 9 months FY23. PAT stood at 9.5 crores for Q3 FY23 and rupees 52 crores for 9 months FY23. Operating revenue has remained similar in the 9 months FY22 and 23 despite muted customer response in our key market, which is China. However, since this market is a key margin generator, there has been a dip in our margin. Also, we have not seen any major cost pressure on raw materials. Logistics challenges which we had faced in the earlier quarters has eased out. On the expense front, there has been an increase in certain expenses like power, employee benefits, and certain increase in repairs and maintenance, which are in line with our business strategy. And this is all from my side. We can now open the floor for question and answers. Thanks to all of you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashish Uglanwar from InvesQ Investment Advisors. Please go ahead.
Yeah, hi. Thanks for this opportunity. So if we go through the past 4-5 quarters that Supriya has been listed and basically arranging these calls and we've been interacting with you. So the entire commentary that has been there from the management, if I recall, it used to be 750 crores of top line as a target in 2-3 years, and then sustainable margin of 30-35% and all those things. And if I have to look at it going back in past 12 months, everything has kind of deteriorated to an extent where the commentary does not stand anything basically. Whatever has been told to the investors. So the entire management team has changed. Don't know for what reason. There is a CEO change, there is a CFO change, then there is all these numbers. I mean, last quarter you were saying that in China logistical challenges were there. Now you're saying that there is no demand. So, I mean, as investors, how are we supposed to join all these dots? I mean, being in business for 2-3 decades, I mean, these cycles typically tend to be known to the management, how sustainable are the margins and stuff. So, your comments on this will be helpful, and it will need some bit of doing on your part to ensure that we keep trust in whatever is told to us, basically. So, your comments on this will be helpful, sir.
So thank you for your question. See, in terms of the last couple of quarters' performance, since this year, financial year began, the major issues we have seen in the last 3 quarters, and we have actually been very transparent throughout all our interactions with investors, earnings calls, that we are facing logistics issues in China because of the continued lockdown. So this is something we have been very transparent about. Now, what has happened is that because of the continued lockdown and because of the widespread use of hand sanitizers, masks, people are not going out of their homes, the demand itself for antihistamine range has dropped down significantly. So this is a result of the continued lockdown which has been going on for over 3 months. So that is one of the major impacts that we have faced, and this is why in this quarter, we are saying that yes, we are now facing a demand drop because of this continued lockdown situation in China. And what I would like to also highlight is in the past also we have said that the company has a leadership position in 3 molecules out of the 38 molecule portfolio that we have. These 3 molecules have moved into the regulated market space. They are very mature molecules of the company, and their contribution to our top line as well as our bottom line is very significant. Unfortunately for us, because of the situation in China, one of our key markets and key products has been badly impacted. If you look at the other therapies, they have performed well. The growth in those therapies is quite stable. But because currently the dependence on this particular therapy and market of the company is high, the impact on the top line and the bottom line is visibly quite significant. I don't think, even now the strategy for the company has changed. We still maintain that the company will continue to show good growth in the next couple of quarters. For this, what we have done is we have already identified a group of 5-6 products, which we have now fast-tracked into the regulated market space. These molecules have very good volume potential, so they can add quite significantly to our top line and give us a decent margin as well. So once these molecules start maturing into the regulated markets in the span of next 2 to 3 quarters, you will see that the portfolio would have been significantly de-risked. So whatever comments we have made in the past that, we are looking at doubling the top line in the next 3 years, we still stand by those comments. We also have a lot of CMO opportunities which are at advanced stages. In fact, 2 of them have gone through the signing stage, and we expect to see some revenue generation from the quarter 3 of next year. So yes, we have identified the risk at our side, and it is a risk which all the, we have been very vocal about with all the investors and everyone in the past as well. And now we are putting our best efforts to try to mitigate that risk. So we are committed to showing growth in the next couple of quarters. And as far as the, senior management team getting changed is concerned, we have also addressed this in the past, but I would still like to take this opportunity to address this. The CEO, due to some personal reasons, family reasons, he had to step down. He still continues to be with the company very much. He's our technical lead. It is not like he has left and taken some other job opportunity. So he's still very much a part of Supriya. And now with Krishna joining us, in fact, we have strengthened our finance side. He has a much wider experience and exposure to the pharmaceutical sector for over 20 years, and he's been part of listed companies. So in fact, I would say that on the finance part, we have strengthened our team, and we continue to strengthen our team further. We have identified areas like R&D, manufacturing, and technical areas where we would like to further strengthen our team. So you will hear from us very soon on that front as well.
So what is the outlook on margins, and related to that is how much China competition is there on the top line and margin front? If you can be a bit more clear on that, it will help us understand how the numbers can shape up from here. And what's your outlook on the margin actually? That will help us.
See, at this point, we are not giving any sort of a commentary on margins, and also we are not giving any sort of a guidance for future. But we believe that we will be in a steady state from now on. I think that is something which I can always say. But we would like to, perform for the next couple of quarters before giving any sort of guidance at this stage. Okay? We are not guiding anything at this stage. We'll be waiting and watching for the next couple of quarters. I think we will let the performance speak, sir.
But what is the stable state? 13% margin that you reported this quarter, or 20, 25, 30% that has been coming in the last?
It would be around a late or early 30s, I would say. But please don't take this as a guidance. We are working on improving all of this further also. But at this point in time, you can say that around 30ish would be a steady state in future.
So this is, we're talking about the next 2-3 quarters, or we're talking maybe 2 years down the line or 1 year down the line?
No, it would be for the next couple of quarters, but we can always see there is always a scope for improvement further. As of now, whatever we are seeing, looking at the Chinese situation, this is what we believe would be the number at this stage. But we expect a quarter-on-quarter improvement going forward.
The other part I asked was the China proportion to sales and margins.
I'm sorry to interrupt you, sir.
Ma'am, this is very important because we have been investors, and there are many people who have kind of had a bad experience till now. So I think rather than a time limit, it would be better if you could answer all those questions.
Sir, may I request you to rejoin the queue because we have participants waiting for the turn.
Okay.
Thank you. The next question is from the line of Yogesh Tiwari from Arihant Capital Markets. Please go ahead.
Yeah, good morning, sir. Am I audible?
Yes.
Yeah, so my first question is, are you seeing any pricing drop in CPM? And
Yes.
what would be the quantum? Approximately single digit, double digit?
So while we'll not be able to share, this information on the quantum, but yes, we are seeing, because see what has happened is because like I mentioned in my speech as well, because of the continued lockdown, the demand has dropped, and when the demand drops, there is definitely a pressure on the pricing as well. So we are seeing price and demand pressure from Chinese market on CPM.
And what would be the seasonality for CPM? Like, which are the main quarters for this product?
Usually quarter 2 and quarter 4 are typically the highest sales in terms of CPM. But because of the lockdown which was there in China during quarter 2, we did not see that kind of impact. But if you look at the revenue generation, and if you look at the region-wise contribution, you will see that in terms of volume, we have been able to sell CPM into the other markets like Southeast Asian markets like Indonesia, Malaysia, Vietnam. So there we have seen good volume pickup. So in terms of volume, you might not see a large drop, but because one particular market has been impacted and that market volume and price typically contribute very largely to the revenue and bottom line. That's why you're able to see the hit in the P&L as well.
And madam, regarding the gross margin, so it has been all over the place, like from 60% to now we are like approximately 51%. So if we take a base of FY26 where we double the revenue, what would be the range for the gross margin, the target range for the company? If we can get a range for FY26.
At this point, it is too premature to talk about margins in FY26. See, I think let us cross this financial year, and in future, I think when we believe that we could give some sort of a guidance, we will certainly guide the market. We are not shirking away from anything, but since these are all what do you call one-off sort of issues which had happened, which the company hadn't seen in the earlier instance. So please also understand that we don't want to guide such a long term, but it would be a very, very healthy margin. That is something which the entire senior management is working upon, sir.
Sir, sir, what will be the margins for? Do you believe the margins have bottomed out for this in this quarter?
Sir, we don't want to give any sort of a guidance, but yeah, I would certainly say that this would be one of the lowest performances yet. I don't think it should be anything going way below this is what we also believe in.
Correct.
Thank you, sir. Thank you, sir.
I would also like to reiterate what Krishna said. I think this is the lowest what has happened, and we don't see it dipping from this anywhere.
Sure. May I ask one more question, if possible? Hello?
Please go ahead, sir.
Yes, what is the demand scenario for ketamine in Europe? Are we seeing any strong traction there?
Yes.
Sir, we don't comment on product-specific stuff, sir, because these are all our important products. I think it would be very, very improper for us to guide about a single molecule in a call. I think if you can always call me personally, I think we can have a chat on this. It would be a bit inappropriate for us to talk about individual product margins at this stage, sir, because these are all our confidential and important molecules, and we would not like to share the demand as well as the margins in an open forum, please.
Sure, sir. Sure, sir. And sir, lastly, like what was there will be a sharp spike in other expenses. So what would be the component leading to that increase in other expenses for the quarter?
Basically, what had happened is, of course, one is on a very good side, the CPHI has started. So the last quarter we had some expenditure on CPHI. So that is on the marketing side. Of course, a bit of power and fuel, and we had to maintain a couple of reactors on the plant side. So these were some of the expenditures which had gone up. Of course, employee benefits also have gone up a bit, which of course we had already said in our speech. due to all the new personals joining in. So these are some of the areas where we had seen, but we do expect a bit of a reduction on the repairs and maintenance going forward, but nothing significant is going to reduce, sir.
Thank you, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Naresh Vaswani from Samiksha Capital. Please go ahead.
So, first question is on the China market. Can you hear me?
Yes.
Yeah, so while you mentioned that because of lockdowns, demand gone down, but what we saw in India as well, post the reopening, the demand came back much stronger. And now since we are hearing China has opened up, why are we not seeing our demand recovering in the China for the CPM?
So, like I've said in my speech as well as I explained before, what has happened is that because of the extended lockdown and widespread use of masks and sanitizers, and there was a very strict lockdown, so people were not leaving their houses. There was no flu, like the common flu, cough, cold had gone down significantly. So, of course, when a scenario like this happens, it will have an impact on the demand. So that is why once things have opened up, what we are understanding from the our contacts in the market is that because of this extended lockdown situation, the demand for the product itself has gone down. Not a permanent situation, but what we understand from them is that this situation will persist at least for the next couple of quarters. For a market to recover, it will not be, very immediate. It will take a couple of quarters for the demand to stabilize back to what it was earlier.
All right. So that means there is some stocking still there in the market which would get utilized, and post that you might see recovery in the demand, right?
Yes. We anticipate at least in the next 2-3 quarters, similar situation would be there. But it will, keep stabilizing. Post that is when we actually think that the market would be in a position to recover.
Right. And you mentioned that there are 4 to 5 products which will start to go into regulated markets, and that will start to contribute in the next 2-3 quarters. So can you help us understand which are these products, and what would be the contribution of these products in next, let's say, 2-3 quarters?
So while I can't talk about specific product names, but the therapeutic categories, yes. So we have some products from anti-hypertensive range. In the anesthetic range itself, we have another product where we are seeing good traction in North American markets. Anti-asthmatic vitamins also, we are working on some large CMO opportunities with the innovator, where we can see a very large volume scale up. Then decongestant is another category of products wherein we are completing the registrations in US and in Europe. We are expecting to get the USDMF number in quarter 2 of next year. So these are some of the therapies wherein, for the products, the volume demand is quite large and the margin profile is also quite decent. So once these products and these regulatory approvals start coming in, like I said, from quarter 3 of FY24, we should be able to start seeing good, revenue generation from these products. But the specific number on how much revenue and which products, unfortunately, I will not be able to discuss in this forum. But these are just some of the therapies that we have already identified and we have been working in the last couple of
Hello? Am I audible? Hello?
Yes.
You are audible, yeah, please.
Yeah, so okay. So, but what I was trying to understand is, will this take a longer time to materialize, or you already have the registrations in place and you are starting to get firm orders on these products? So, like, will it be like a 1 year down the line thing, or do you foresee it faster?
It could be faster because for some of these products, some registrations have already started coming through. We are working on some specific projects with certain customers wherein the customers have already bought the validation volumes. So, we are waiting for them to come back to us on the commercial requirements. So it would definitely be faster than 1 year.
And your guidance on doubling the revenue was on the base of FY22, right? By 26?
By
So
27.
FY22. Yeah, so that doubling of revenue was on the base of FY22's revenues?
FY23 revenues.
Okay. And one last question. So on this 2 CMO projects where you are close to finalizing the terms, what would be the size of these projects, if you can comment on that? And which therapies will these belong to?
So while I can't talk about the size of the project, but definitely these would be diversifying our portfolio further. This would be more on the advanced intermediate side of the products. It would not be API centric. So definitely it will further make our portfolio more robust and make it more de-risked, I would say. But you in the next coming few months itself, you can wait for some positive announcements from our side on these front.
Okay, thank you.
Thank you. The next question is from the line of Avnish Kara from VT Capital. Please go ahead.
Hello, am I audible?
Yes, you
Yes.
are.
Hi, thank you for taking my question. So my first question is on the China market. So I just wanted to get a sense of what is our right to win in the China market? Is it better compliance or some sort of a technical excellence that we have in the drugs that we manufacture for them? Because I think it's a core market for us, and it's a large, high margin market as well. So if you could just give us some color on that.
Mr. Avnish, I'm sorry to interrupt, but your voice is sounding muffled, sir. We are unable to hear you clearly. Can you please repeat your question?
So I was able to hear his question, if I can answer.
Sure, please go ahead, ma'am.
So yes, in terms of this China market, we have both on the compliance side as well as on the quality side. In terms of compliance, we are the only registered foreign source with NMPA, which is the Chinese regulatory authority for this product. We are also the only manufacturer to have the NMPA site approval. We have audited and approved by them. There is a very quality of material that we produce for the China market. They don't follow the normal monographs. They have their own Chinese monographs wherein the impurity levels are far more stringent as compared to any other monograph. They also have very specific requirement when it comes to the infrastructure, when it comes to the GMP compliance at intermediate level also, for which we have invested in our site, and we have created that infrastructure. Because of all these things, we have been able to get a premium price in that market, and that will continue once the situation stabilizes in that market. So it is both a combination of the quality we supply to that market as well as the regulatory compliance that we have.
Got it. Also on the, I think if I look at your geographical numbers, then US has become, it's slowly, I can see a slight uptick over there. So you're talking about future growth. So, is it safe to assume that, US will be a key focus market for you going forward? And if you could also help us understand what are the other markets you will be focusing on, where the growth for your new products will come from?
Yes, like you very rightly mentioned, we have seen some increase in the North American markets, and this is because we are getting good traction for some of our existing products there. When we talk about growth, North American markets are something that will contribute largely to this growth, because some of the other therapeutic category molecules which I discussed previously, we see a very large market in North America. So definitely, as the next couple of quarters progress, you will see more contribution from North American markets. Europe still continues to be, one of our largest regulated markets. Even if you look at the numbers of quarter 3, the only impact which has happened is because of the long holidays which happen in December month, and we are unable to ship during this entire month. So whatever sales, we were not able to do has been pushed back to quarter 4. So as such, we have not seen any sales loss for the Europe market as well. So situation there also is stable. And going forward, once one of these other therapies regulatory approvals start coming, Europe, North American markets, Latin American markets would be the larger contributors in regulated market space.
Right. And I just have one last question. There was some sort of I think there was a debottlenecking done in blocks A and B. So how much of improvement did that lead to, and what current utilization levels are you at on a consolidated basis?
So on a consolidated basis, the current utilization is about 72%. The debottlenecking we have done, yes.
I'm sorry to interrupt you, Ms. Wag, but your voice is breaking, ma'am.
I think the other people have to mute themselves because there is a lot of background noise which is there. Are you able to hear me now?
Yes, please go ahead.
Yeah. So I was saying that, yes, currently the consolidated capacity utilization is at 72%. And the debottlenecking has definitely helped increase the volumes of certain individual products, wherein we were not able to get the larger volume. But overall, we are at 72% currently.
That's it from my side. Thank you.
Thank you. The next question is from the line of Shashank from Crescentia. Please go ahead.
Yeah. Are you able to hear me?
Yes.
Yeah. See, my first question is, after the investor wealth been eroded, are you sticking to a capex which you had planned and you are published in your previous con calls, or is there a change in the capex in terms of reduction of capex? That's the
Okay. Is your question over, or you are having any continuous questions, sir?
No, my second question is that in slide number 7 of the investor presentation, where you see the Asia is contributing 50% of your total Q3 sales, but for the last 15-20 minutes you're saying China is not contributing, and that is the one major reason.
Okay.
So, but if from 29% it is going to 50%, that means Asia, and in which China is a major portion, is contributing. So I want to understand, is it I'm reading a wrong data or is it something else? That's my two questions.
You are reading the data in the other way around. I think, 9 months FY22 is 50% and 9 months FY23 is 42%. And what has happened is, in China, the margins are pretty high, but we were able to cover up most of the sales. That is why, if you see, we haven't seen much of a reduction on the top line. If you look at our top line, we haven't lost much. But most of it had come and hit the margins. So whatever you are seeing 9 months FY23 highlights, see, whatever it is based on my top line numbers. My top line numbers, I haven't lost much. So it is only that I had sold much in other Asian territories, like what Dr. Saloni has already said about. Okay. And with respect to capex specifically, see, some of these capexes like module E and certain other stuff which we had already committed during IPO times is what we are carrying forward, and I don't think there is any change in any of our thought process in that. So that is happening accordingly. I don't see any reason for us to stop. And looking at our expanded portfolio, which Dr. Saloni has just specified, we believe that our revenues are only going to grow north, and we don't see it as a major problem. See, whatever that has happened in this quarter is just an aberration, and it is not something which is very permanent.
Yeah, but can you hear me now?
Yes.
Yeah. So, because I was referring to Q3 in specific only, slide number 7. I'm not talking of 9 months.
So, yes, you're right. See, like Krishna explained, and I have also explained this, when I was answering about China. What has happened is, when we consider Asia, we also consider all of the Southeast Asian countries. So in countries such as Indonesia, Vietnam, Malaysia, some parts of Middle East, we have seen
a good, nice volume growth. So, like he rightly said, that in terms of volume, there is not major dip because we were able to compensate through some of these other Southeast Asian markets. That's why overall, if you see, the Asia revenue generation has not dipped at all. But what impact the China situation has caused is on the margin front. And yes, also on the top line, if the China revenue would have been generated, our top line as well as our bottom line would have been significantly higher. But we have been able to get the volume from some of these other Southeast Asian markets, and that's the reason why overall there is no dip in terms of revenue generation from Asia. And on the capex, like see, most of this capex is driven for capacity enhancement, without which the further growth in the portfolio cannot happen. So capex remains the same. We are continuing with that because the doubling of the top line will only happen if we have a larger capacity for some of these other molecules in the portfolio to grow. And we are going to see a very good traction of these in regulated markets, and we will need that capacity.
Yeah, that's it from my side.
Thank you. The next question is from the line of Jagveer Singh from Shade Capital. Please go ahead.
Yeah, thanks for the opportunity. So I want to know what is the percentage of revenue we derived from the China in the last 9 months?
Sir, our CFO will answer, but let me tell you something on China, because some predictions is wrong at the end. See, China, whatever CPM we were selling, is not the major consumption of China. Chinese has got lot of big billions of tablets and capsules making formulation units who cater all over the world. And for that, this is a GMP audited site only from India. That is why the purchase was taking place. And that too also from the beginning with limited quantity. That we must understand. It was told to us. If we do that, suppose demand is 300 tons and you feel that I should export 150 tons, not possible at all. Otherwise, there's going to be a hit as an anti-dumping duty from China, which today we are also doing from our end. This was the thing which was from the beginning when we registered the product, it was told to us, you cannot continue to sell as much as you want. You have a restriction of the quantity. If you exceed, anti-dumping is expected on you and then you lose the business. This is what I would like to inform you all. This is the type of business in China.
And to add to Dr. Wag, what I said, see, basically Chinese revenues are, it's a very, very significant number. See, we don't want to answer very specifically with respect to China on the percentages, but it is a very, very large chunk plus also a great margin contributor for us. So by not having Chinese sale, we had lost ground on the margins. That is what I think the whole commentary is all about in this quarter. So if we are able to recoup the sales as well as the margins, I think our businesses would be skyrocketing. That is how I can put it. I don't want to use any other adjectives beyond this being a conference call, I think, but if you could come one-on-one, I think I could explain this further.
Sir, my next question is regarding 15 days is already gone in this quarter. So what is the ground situation right now? So I'm not asking for any guidance. I just wanted to know, so we may see some improvement in the margins and the top line in this Q4 over Q3.
Sir, we don't want to guide anything for the market, but this should be a better performance when compared to Q3. I would like the results to speak for itself, sir. We don't want to unnecessarily guide the market, and we don't want to raise any sort of an expectation with the people. But yes, having said that, the performance of Q4 would be comparatively and far, far better than Q3, sir.
But Q4 seasonally always higher for the Supriya also, no?
Correct. It's seasonally also higher, and like Krishna said, that definitely our performance for Q4 would be better than Q3 performance.
No, so it would be better than because of the Q4 is seasonally higher, or there is some improvement in the because 15 days already gone. So I just want to understand. So there is any improvement in China part also, not on the ground.
No, the China situation will continue like my speech and earlier also. The China situation would remain the same at least for the next couple of quarters. However, some of the other therapeutic category products, we have 38 products in our portfolio. And while some of the other products might not be very high in terms of margin contribution, we have seen good traction for these products in some of our, regulated markets. So that is the reason why we are confident that it would be better, because these product contribution would be seen in quarter 4 of this year.
So only last question I have.
Mr. Singh, may we request-
Only last question I have, ma'am. Only last question.
Sure. Please go ahead.
Yeah. Ma'am, I just want to understand that if suppose in the Q4 next year, in the first half of the Q4, even Chinese situation does not recover. So from the other markets, we can make the losses in the Chinese market, so we can make in these losses in the other markets?
Correct. So, to compensate for the margin contribution that China was giving immediately would be very difficult, because the number is significant. But like I said, we are working on a risk mitigation strategy. So probably 3-4 quarters down the line, yes, we would be in a very strong position that even if the China situation remains as is, some of the other products would have matured into the regulated market space, and we would still be able to normalize our margins as well as our revenue. But it would take at least a couple of more quarters for this situation to streamline.
Okay. Thanks a lot, ma'am.
Thank you.
Thank you. The next question is from the line of Tushar Bohra from MK Ventures. Please go ahead.
Yeah, thanks for the opportunity. So my first question is just to understand this better. We have some products in Q3 in Europe which we have not been able to sell. We believe it got deferred to Q4, right? So would these products be on a cumulative aggregate basis be higher margin contributors to the average? So I'm taking 30% now as the benchmark as given on this call. Is it fair to say that the dip in Europe contribution in sales this quarter is because of this deferment, and in Q4 once these products come in, we should expect better revenue as well as margin contribution?
Absolutely, yes. Like I said in my speech as well, the sales dip in Europe is not because of any sales loss. It is only that this sales has been pushed into the quarter 4 because of the long holidays in most of the export markets actually. Once these shipments go through, like I said before as well, quarter 4 performance would be better in terms of revenue also and in terms of margins as well as compared to quarter 3.
Would you be able to quantify or give some sense of how much revenue are we talking that has potentially got deferred?
That is something that we will not be in a position to share on this particular platform, but we are happy to talk in detail separately. But in this platform, it would be very difficult to give any specific number.
But ma'am, would it be safe to assume that against the average run rate of about close to 110 crores for the last 3 quarters, would we therefore expect a significantly higher traction in the coming quarters?
Of course, Tushar, we will see a better Q4. I think that is what we can say at this point in time. Yeah, it would be comparatively far better than Q3.
Sure. My second question is if you can help understand the new CMO opportunities a bit better, including the ones where you are saying that have sort of progressed, as well as on some of the others, if we can have some qualitative highlights, and also the milestones or next what we should look forward to.
Yes. So in terms of CMO opportunities, at the moment we have 8-9 concrete CMO opportunities. Most of these are, wherein we would be manufacturing certain advanced intermediates for multinational companies, wherein the initial agreements have been signed and now we are in the process of tech transfer. Some of these CMO opportunities are also AI-centric, where we would be partnering with the innovator and we would be supplying their entire requirement. stem from our GMP approved site. So 2-3 projects are of this nature as well. And then we have some CMO opportunities which are away from API and intermediates into more nutraceutical sectors. So that would also definitely help in de-risking our portfolio. In terms of how they are progressing, most of them, like I said, are concrete opportunities. When the initial agreements have been signed, they are currently in the process of tech transfer and technical information exchange. 2 of these have moved to a very advanced stage. And like I mentioned in my speech as well, from Q3 of FY24, we should be able to see some revenue contribution from these 2 opportunities. In the next coming months, we would be in a better position to give more concrete information and make announcements of these CMO opportunities.
Thanks. And finally, on the new products that are being discussed, regulatory market. So we should expect some more of products to start getting sold in regulatory markets in this financial year, or rather in FY24. And what kind of margin profile are we expecting for these products? Would it be in line with or higher than the 30% guidance that we are sort of maintaining for the near term?
We will start seeing the contribution from these other basket of products in regulated market space from Q2 of FY24, because most of these products we are still applied for the regulatory applications, and we are expecting them to come very soon. So from Q2 of FY24, we can start seeing some good traction for these molecules. In terms of margin profile, they would be decent margin generating products. Like we mentioned, somewhere in the similar range of 30-32% or EBITDA.
Sure. Thank you so much. I'll join back in queue.
Thank you.
Thank you. The next question is from the line of Abhishek from Padmaja Investments. Please go ahead. Abhishek, please go ahead with your question. Your line is unmuted.
Yeah. This management turnaround, do you think it is bad?
I'm sorry to interrupt you, sir. We are unable to hear you. Can you please speak louder?
Yeah. The management turnaround, like the CEO leaving, CFO leaving, then again CFO leaving. Yeah.
So, like I said before as well,
this kind of a churn, this kind of a turnaround is like looks very bad on retail investors, right? Yeah, because that's the reason, right? Because even in today's call, if you see, very few institutional investors turned around. Even though you are aspiring to be a company in a CRAM space, CMO space, CRO space, it's turning out to be bad.
So, I've clarified and I've explained that the management turnaround we're talking about, if we really look at it, the CEO stepping down, we have mentioned it many times in the past, and we have still clarified again and again that the CEO has just stepped down from the responsibility of CEO due to some of his personal reasons. Because of, some of his family members not keeping well, he's not able to give as much time to the company. But if you look at our company structure, he still continues to be very much a part of Supriya team as a technical lead. So let us, address it once and for all that he has not left the organization just because of some of his family members not keeping well. He has stepped down from the CEO responsibility, but he has taken the responsibility of a technical lead, and he still is with us for a lot of CMO opportunities and for technical advices. In terms of CFO, which is the second thing, in fact, I've already mentioned that with Krishna coming on board, for us as a newly listed company, this would help strengthen our finance, aspect, because he comes with a lot of experience running a listed company, specifically in pharmaceutical sector for over 20 years. So this should be, in fact, construed as a very, very positive step that we are trying to strengthen our senior management. And in the next couple of quarters also you will see that we are further strengthening our senior management team on our side on technical capabilities, because we definitely see a lot of scope of growth for the company, and to facilitate this kind of growth we need to have the right kind of technical people on board. So if anything, I feel that going forward and even now, the complete focus of the management is to strengthen the senior management team.
Thank you. The next question is from the line of Siddharth Purohit from InvestQ Investment Advisors. Please go ahead.
Yeah, hi. So earlier when you had discussed, probably you had mentioned that we work more on a short-term contract rather than a very long-term arrangement with our customer. So is there a change in strategy for the new molecules, new geography that we are looking for? Because probably that is one of the reasons probably we have lost some sort of business. So what is the new arrangement that you are looking for a sustainable growth?
So as you are aware, the API market is very, very dynamic. So most API companies, and including ourselves, when it comes to API, we will continue working on short-term contracts, because the raw material pricing situation is so dynamic that if we get into a long-term contract, it might not be beneficial for the company. But because the API is more short-term contract driven, we are trying to de-risk this aspect by introducing CMO opportunities, wherein the advanced intermediate and API requirement with some of the multinational companies would be a long term, like a 5-year, 7-year contract. So we are trying to de-risk on that aspect. So then, going forward, it would be both short-term as well as long-term contracts.
And your Chinese customers still in touch with you? What is their feedback that whether they will continue business with you if things improve, or what is their commentary on that?
Yes, absolutely. They are in touch with us. That is why we are able to share in detail the current market reality of China, and we have been sharing that over the last couple of calls as well. Like I mentioned, that Supriya has a very strong position in China because of the regulatory compliance that we have, and also the quality of material that we produce. We are also an NMPA approved site. And like our chairman said, that most of the end users in China have approved Supriya as a primary source. So as soon as the market stabilizes, we would be, their preferred source, and the entire volume would start coming back to Supriya. So it is just, a matter of when the situation stabilizes. It will take definitely a couple of more quarters. It is not short term. This is a long term impact on the market, and for it to recover, we are anticipating at least another 2-3 quarters.
Okay. Yes.
Thank you. The next question is from the line of Karan Asli from Maximal Capital. Please go ahead.
Hi, thanks for the opportunity. So just want to belabor on the China issue a little bit. Any thoughts on the local capacity in China? Have any local competitors increased their capacity or up their compliance game, if you're aware of that?
The local manufacturers in China, historically also and even today, they are non-GMP compliant. That is why even companies like Johnson & Johnson, GSK, who have their sites in China, still continue to buy from Supriya. So in that aspect, there is no change. They are still non-GMP compliant, so we are still their preferred source. Also, in terms of capacity, because the demand has gone down, there is no further capacity enhancement also which has happened locally in China. So this is the current situation, what we have understood from our agents in China.
Right. And would it be possible for you to segregate your demand in China into local consumption and export formulations?
No, I think it will be difficult to say like this, because I have told you in my previous speech that we are supposed to cater certain quantity only. If we exceed, there won't be possible to ship 1 kg also, because the day we do that, anti-dumping duty will be done on us. Today you are saying many of the items we are ourselves putting anti-dumping duties on them. In result, many industrial areas, certain products are getting closed. So we have a certain market, certain GMP standards, certain approvals, and that is already on the website of the Chinese NMP and CFDA, only foreign source Supriya Ideal approved. So that is why we are able to sell, but not with 100% sales, limited sales. That's my submission to you on China. And I think China, we have already discussed a lot of things. Let's not discuss on China matters again and again, because the issue is same.
See, having said that, like what the chairman is ascribing to, see, you will not have 100% capacity out of China. It is only that certain of the capacities will be granted, and that is what we are able to cater. Okay, now that there is a drop in demand because of what Dr. Saloni has already said in the speech earlier, that is why there is a dip in China at this point in time. I think this should be settled once and for all at this stage. I think that is the entire submission of the management on China, sir.
Sure. And my next question is pertaining to the margins now. I think you said directionally we expect margins to improve, but at the same time, China is not going to come back till, let's say, Q2 of next year at least. And the regulated products also that we are pushing into the market will also come in Q2 of next year. So in the meanwhile, how do we, what would be the more granular levers we have to, get close to that sustainable margin level that we have? Because that would mean that EU would have to again come back significantly in terms of, 40 to 50% plus contribution. So do you see that happening?
Sorry, go ahead.
So like I said before as well, if you look at our revenue generation from the European market, it has not been impacted. There is no sales loss as such. We are doing quite well. I mean, the product portfolio and the basket there is very, very stable. It's just that some of the sales from Q3 has gotten pushed into Q4 due to the long holidays. Other than antihistamine range and Chinese market, we also have anesthetic range of products which are doing quite well, and which are also one of the other major therapeutic categories for the company, and they are doing quite well in the regulated market space. So definitely we will see a lot of contribution from these therapies, even anti-asthmatic for that matter. We'll see revenue generation from these therapies. So that's the reason why we expect the normalized margin.
Sure, I see. And in terms of how we expect to end this year, I think our target was to reach up to last year's revenue levels. Do we think we'll be able to match that?
See, at this point, we don't want to give any sort of a guidance, but yeah, it looks like we might fall a bit short on the revenues when it comes to last year levels. Yeah, of course, that is what is going to happen.
Sure. That was helpful. Thanks and good luck.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to Dr. Satish Wag for closing comments.
Thank you. I would like to thank everyone for taking time out and joining on the call. I hope we have been able to respond to your queries. If you have any further queries, you may reach out to our investor relation partner, Orient Capital. Thank you very much, and have a good day.
Thank you. On behalf of Supriya Life